How'd you come up with the name Split Capital?
Do you think that we'll ever see anything like that Wall Street Bets era?
Thank you for making me sound so magnanimous, Andy.
Are you gonna split your way with my money, or are we gonna grow this bad boy?
GM, welcome to another episode of The Roll Up. Today we have the pleasure of speaking with Zaheer from Split Capital, which is a liquid fund. And we're going to be talking about why liquid funds are operating right now a little bit differently than VCs. Now, from the title of this episode, you may have guessed, liquid funds currently have an edge over VCs, primarily for a few reasons we'll get into on the podcast. But of course, none of this is financial advice. As always, we're going to be talking about some of the current market landscapes and why liquid funds are poised for success in these current market conditions. Zaheer and Split Capital are professional. Do not construe anything they say or we say as financial advice. In other words, you should not try this at home. Hope you enjoyed today's episode. First, a word from our sponsors. Vertex Edge is now live on Say Network. Say users can now trade 50 plus spot and perp markets with the unified order book liquidity of Vertex Edge across Arbitrum, Blast, Mantle, and Say. The next 6 weeks, 850,000 Say tokens will be up for grabs as trading rewards every single week, exclusively on Say. Join Vertex on Say Network now on Vertex Edge. That's vertexprotocol.com. Welcome aboard on our journey into the singularity. This is the endgame roadmap for Frax and Fraxtal, the new L2 out of the Frax ecosystem that is totally based on fractal scaling. Fraxtal is a modular L2 blockchain built by Frax with modular and fractal scaling in mind. Fractal scaling is based on the Mandelbrot set of fractal images, and it explains how L2s become L3s and the entire app chain lifecycle goes through its evolution. The Frax ecosystem is made of some of the top builders in the space and has stemmed from its OG days of the Frax stablecoin. It is now in the LST space, the LRT space, and this Fraxtal L2 joins the existing suite of Frax products, including Frax Swap and Frax Lend. You can see Frax Ferry, the bridge to go from any chain, Arbitrum, Optimism, or mainnet into the Fraxtal mainnet. Bridge your tokens and bring your Frax assets into the Fraxtal ecosystem. Join today to get the best out of Fraxtal. You are still early. Join today. Take part in our expedition into the singularity.
What's going on, guys? Welcome back to the Roll Up. Today we have Zaheer from Split Capital. How'd you come up with the name Split Capital? Is this a meme or something?
It's a funny story. There's three stories to this almost. But it all kind of ends up working out together. But basically, I started a fund back in like 2018, and small little prop fund, and we had some disagreements with like a third partner of ours, and then essentially, myself and one of the other co-founders was like, if we do any fund, we're going to split it down the middle, 50-50. No weird economics, none of that. So that was the original kind of idea. And then, funny enough, when I left my last firm, it was kind of a similar ordeal. That was like on great terms, so it wasn't a problem, but it was more so like, splitting away like the same kind of strategy and book, and then launching Split Capital. And then the third kind of angle is that if you have any sort of financial institution and you have like a universe of like domain names and like, trying to get a directory, it's very, very difficult to get like a single word like fund name. But I don't know how nobody's ever taken Split, like in a bunch of different like jurisdictions, and they're like kind of naming like services. So we got really lucky because you'll see some like insane fund names. Like people will say like, we have like, I don't know, Pelican Capital or whatever, right? And then you'll read like the actual fund name and it's like Pelican, Digital Opportunities Fund 3 or whatever, right? It's like, it's never like that, you know, straightforward. But we got super lucky with ours. Like ours is pretty much split capital, like down the middle across like all jurisdictions with some variance. But so that's like the last kind of angle on the name.
I wonder if any of your LPs are ever like asking you, like, "Hey, so the story of split capital, are you gonna split your way with my money, or are we gonna grow this bad boy?"
I mean, I've heard like every variation of pun made, and I love it. I mean, it's also nice. You want something that's like pretty sticky and like easy to identify. And it's also ambiguous, right? It's not really like a crypto native name, right? So I think that also helps out, right? You don't want like something to be related to like some sort of like EIP or something like that, right? It's just like
That'd be
very
just way
obvious
too
if it tells.
nerdy. Way too
Yeah,
nerdy. That's not gonna fly in the family office in the big boy game, is it? The
correct,
EIP.
correct, correct.
What has been your best investment ever in of split capital?
So the fund technically launched this year. So I would say like most of the best investments have happened prior to this, and like I'm more happy to talk about that than anything that's kind of happened within the fund. But best investment ever, kind of hard. I would say probably Synapse Protocol. This was like something that like I just thought was like a sick product at the time. Was solving a problem in crypto that didn't really exist. Sorry, like that didn't really have a solution that existed. But that was basically the best kind of investment I made. But I think more of the compelling sort of uh, investments that I've made have been more on the trading side. That's been more of the interest. Yeah, I wish I was better at buying and holding for like a very, very long period of time, but I just don't have it in me to hold something across like multi years and be that convicted. This is why we also run a liquid fund, right? I think it's just a different kind of way to underwrite sort of investment.
So what's your time horizon there on the liquid fund? Like, you looking like day trading, or are you looking more so like weeks to months?
So we actually split our book between like a variety of factors, right? So it's really regime dependent, is what I tell investors as much as possible. So a good way to think about it is, we'll construct a multi-year view or 1 year plus view for the fund, just like assets that we love, like things that we want to hold, things that we want, exposure to. It's a very different ball game than venture funds, because venture funds are closed ended, right? So once the like capital is raised, then you make your deterministic kind of view on like what you think, your deployment window should look like. Obviously, you tell your investors one thing, and then theoretically, like that may or may not play out. But with liquid, it's different, right? Because you have a kind of monthly, quarterly, or yearly subscription model, so people can come in at any time. And then the other part of it that's more interesting is like you like invest as much as possible. You should not want your investors to kind of redeem from your fund, right? So you want to be more positioned for an all-weather type situation, which is how we kind of approach it, right? So I need to think about the down markets as much as I think about the up markets, right? And I think this is where crypto is like now having a bit of a struggle with, which is a lot of the longer term kind of liquid funds in crypto have been focusing a lot of their time on, maybe a multi-year view, but it's really hard because every month you get mark to market, and it's really tough to, your investors are down like 20%, like ETH is down 20% this month, right? So it's really hard to show that over a long period of time if it keeps underperforming. So for us, basically, we have like a multi-year view, then we bring it up to about 6 months, 3 months, 1 month, 1 week. And then there's periods of time when we're trading the book around like quite a bit because there's a lot more activity. And then there's periods of time, where we're very hands off, maybe, one trade a month or something like that at most, and really not touching the book. But it's really like regime agnostic, is how we think about it. But we have to be more specific in each regime over time.
Yeah.
And do you guys like, and it makes sense, like the continuous like performance to try to get better because you're marking your mark to market like much more frequently. Do you have like crypto's 24/7? Like, does that really impact the business that you have on the liquid side versus what a non-crypto market liquid fund would see on something that's only open 9 to 5?
Totally. And this is a good example of something that over time will be a more pronounced kind of differentiator, I think, in this space, which is if you think about earlier this month, right? Bitcoin ETH sold, the whole market kind of really took a dive in early August when the carry trade in the Japanese yen kind of blew out, right? And that happened over the weekend, right? And it's even more reflexive because then Bitcoin becomes the only instrument that people can trade. So if you're like some guy who has like a family office, or you're a portfolio manager at a fund and you have BTC within the fund, or you have, BTC, access to BTC trading, then you're going to use that synthetically to hedge out your risk, right? So then it becomes even more kind of important to be around online over the weekends, that kind of thing. So it's a double-edged sword, really. I think it's nicer because, you don't have to really, you can have access to your capital at all times, but it's also, it's a very demanding thing. And I think this is where crypto goes from being a hobbyist industry, which it has been over time, into a more traditional, very kind of scaled up industry where, teams that can operate 24/7, 365 are going to just crush over time on the shorter time frame stuff. And then the only edge, I think, will be on the longer dated stuff for most kind of individual participants, right? Like kind of like it is in TradFi, right? You don't really see people day trading and making money anymore because, there's better firms out there that have more resources, staff, whatever you want to call it. And conversely, maybe the average retail investor can make money on a long enough time horizon if they, don't really trade around too much.
I feel like this year the market is especially feeling that, like this cycle. I feel like it's been a really weird cycle. I think a lot of people have like underperformed what they thought would be like what they would have done so far. I think a lot of people miss Solana. A lot of people miss memes. A lot of people just like paid no mind to it. And also a lot of these like altcoins or these kind of more long tail has really just been decimated in the last like 3 months. It seems like there's like some sort of entities that are in play in the market now who have a greater control over kind of like what is happening than previously before. And I don't know if it's an ETF thing, an institutional thing, but it just feels like this cycle has been completely different than anything in the past. And even calling it a cycle, I feel like is an interesting take. And I think that we see more of this asset dispersion of returns in the coming, like from this, like where we're at in this kind of like, obviously majors are still quite high, but I think in this like altcoin trough that we're in kind of like this like bottoming period or like this bleed out. I think that we're going to see even further like which assets rebound and which kind of don't. And yeah, it's just been a really, really weird like last 8 months in the market.
Totally. And if you kind of index on that, right, you said last 8 months, so I'd say 2024 in particular, the ETF has fundamentally changed crypto in a variety of ways, right? Now we are an industry that is no longer dominated by native capital. We are now getting to the point where it's almost 50-50 between non-native capital and native capital. And what I mean by this is that there's a reason why BTC has really pulled apart from the rest of the market. The people who are bidding BTC do not care about the rest of the market. They're not looking at the rest of the market. To them, this is a singular asset. They're not in, the race to figure out what's kind of behind, door number 3 with Solana and Tron and all this other stuff. There's a world where ETH might get to that point, and I'm hopeful for that. But until it happens, and then we'll kind of see what that looks like. But I think it really cannot be stressed enough how big of a kind of market structure dynamic change has happened since the new year. For anyone who trades on a lower time frame, for anyone who trades like on a more professional basis, they can attest to the fact that the market has gotten a lot more complex, a lot less predictable, a lot less kind of retail driven. And now we're kind of at the mercy of larger institutions for the next, call it couple of years in particular. I think the other part of this that people really don't appreciate enough, which is, FTX was more or less, the retail friendly exchange. And once FTX got unwound completely, all of that money was just trapped there, basically like in a lockbox that you couldn't access, right? So if you're the average native participant, not only are you probably not outperforming BTC and ETH, over a couple of months or a couple of years, but you also have your capital just kind of sitting there waiting to get out of bankruptcy hell, right? And for the people who sold down their claims, well, they're getting kind of pennies on the dollar, right? And the people who haven't are still waiting for that money to thaw out, right? So overall, it's been a lot more complicated in terms of how people can get capital back, right? If you're an institution, you could theoretically always go and raise capital. But if you're the average retail investor and you get liquidated or you lose your money, your means to get that capital base back is very, very difficult, right? If you had a chart of the amount of BTC that was held by native capital or individuals, and same thing with ETH and same thing with Sol, you would see over time that chart would dwindle down pretty aggressively because the average individual doesn't have 100 BTC anymore or 1,000 BTC anymore, right? They've lost it all trading or losing money on bankruptcy or whatever it is, right? Which really sucks, but it is the case, right? And I think this is why, people always ask me about, running a liquid fund. It seems very complicated, all these things. And it is, it's not an easy endeavor to undertake, but I would challenge people to also think about it from a retail perspective that the game for retail is just no longer there. You're being able to compete at a high level is very, very difficult. So it's either adapt or you kind of just die over time, right? Or phase out of the game completely, right? So it's like one of three options. And I think we've taken the, very much the adapt and try to grow in that realm. But the other two options are a little bit more bleak, right? I think you either have to completely withdraw yourself from markets and say, I'm going to buy BTC and ETH and I'm going to go spend my time doing something else, or I'm going to lose all my money trying to trade against this market, which is very, very difficult.
Do you think that 2020 Wall Street bets, meme coin, retail trading frenzy, basically the dumb money movie, do you think that was a very peculiar time and place where the stars just kind of aligned and COVID hit, everyone was online, just kind of made sense that it happened in that time and place? Or do you think that was a trend that we're going to continue to see play out with hyper financialization and more access to information? The edge will kind of spread out. How do you think that we'll ever see anything like that Wall Street bets era, that era ever happen again?
Both things can be true. I think the only question is how large can it get? I think it's totally possible that kind of, spontaneity exists in markets again. But I think I'll give you an example. When you talk to an investor, when you talk to someone in the space, you should never index on the fact that that has happened and we made a lot of money during that era, right? So whenever someone tells me that they made a ton of money in 2020 and 2021, it doesn't translate to anything for me. It's great, you made your money, you did your thing, but that doesn't really indicate much to me because that's not a really repeatable thing. And it should never be the benchmark of which any investor should consider, right? If my fund is predicated on, or my performance or my whatever as the average investor is predicated on that level of insanity, then I'm going to lose 9 times out of 10, right? And I think this is what has kind of slaughtered most retail, slaughtered most funds, is that people have predicated their investment decision making on a reality that would be a 10 out of 10 win for everyone, but should not be the baseline. I'm not saying that can't happen again, but if it happens, great. I'll be there, right? But I should not expect that to be the baseline, right? I should expect that it will be harder and adapt in that environment. I think also to your point on edge getting eroded, a lot of why that era existed was because of very cheap money globally and very little understanding, right? So if you go back to 2017, that was when I kind of joined crypto. You did RFID stuff, right? This was Gentacoin, there was no concept of what blockchain even meant. It just meant we could do anything with it, right? Yeah. And then you got into 2020, which is, okay, we have a general idea of what blockchain can do, but we still have no idea how to incentivize this, and we'll create infinite incentives, right? You can't really regress backwards to a thing that people understand very, very well, right? Now, every incentive mechanism in crypto is pretty well understood. it's pretty easy to understand like how these market dynamics will kind of move forward. And so the, complexity and like, difficulty of being able to make money on these new primitives will basically increase, and the reward will decrease over time. Unless you really come up with something that's like multi-trillion dollar, like, value creation mechanism, which I don't think is super readily available. And again, should not be the baseline, predication that this industry should exist on. Right?
Yeah, to your point, like markets don't really get less sophisticated with time. Like the markets give you information, you take that in, and then the market becomes more sophisticated, so it doesn't regress. Maybe interest rates go to zero again, like capital becomes cheap again, people get more degenerate, but still more sophisticated but degenerate. And I think there is a balance there. And so in that frame of mind, like, we kind of see this full circle moment with DeFi nowadays, where we are sort of like Ethereum, Vitalik, sort of coming back to DeFi in a sense, but not with a less sophisticated view on it. So I'm curious, just from your perspective, how are you viewing this sort of resurgence of DeFi in the last few weeks?
Yeah, DeFi has always been like the most interesting thing in crypto to me, right? Like I've written about this when it was 2020. That like the only interesting use case going forward, like the whole point of crypto is money, right? It's not about like making money, right? I'm just saying like the ethos of building, right, is about money, right? And creating good money and creating good monetary policy, right? And so DeFi is obviously the first leg below it, right? It's not going to be all these other things like governance and, AI and all that. That's all like downstream stuff, right? And hopefully we get there, right? But the money has to be really, really solid. And the money has to have a tangible use case, right? SOV is interesting, but SOV has like a finite TAM, right? You need something more than that. And I think it goes both ways, right? I think the problem was in 2020 that we thought this stuff would, grow infinitely in scale, and we would be at a point where everyone is using Aave to finance their mortgages, into this is all worthless, none of this is ever going to materialize, right? Into now, okay, maybe if we have some regulation, this stuff can be kind of cool, right? Which is, I think, usually how the tech hype cycle works, right? It's like, oh my God, this is going to cure cancer. Wow, this is the biggest fraudulent, most egregious thing. Into, it's kind of cool, right? And I think we're kind of creeping up to the this is kind of cool part. And I think that's where, value is going to be kind of centered around, right? What human beings thought the internet could accomplish back in like the 1990s, or what human beings thought like, aerial flight could accomplish in the 1940s, and like space travel could look like in the 1960s and then onwards to like the 2000s, it was a drastically different thing, right? Aviation hasn't gotten like infinitely better since 1950 1960 era, right? We're not sending people to the moon or like other interstellar travel, right? So it's not a linear function, but has it gotten cheaper, more accessible, more durable, more understandable? Yes, right? So I think that's kind of the goal, right? It's like, are you going to be able to do everything in your existence on Aave? Probably not. But can you use Aave in a pretty sick way, and can it grow materially over time? Yes, I think it totally can. Regulation being the key, like, decision maker here.
Yeah. Very interesting. Yeah, I think it's quite funny that Degen Spartan's 36-month DeFi bear market happened. Like, that was hard to believe at the time. I was sitting there, we were like, no way. And then he's like 1 month, 2 months, and then he eventually just disappeared. Which was, I don't know, that was always just that time period just rings such a nostalgic feeling, just between COVID and all that, and then just what happened. So pretty interesting. And I remember just like, I just didn't sell the top at all. Like I could have done so much better. And I think a lot of people probably did fail to see that as well. So like selfishly, like for you and like how you're looking at the cycle now, I guess the question is literally like, how do you get better at selling closer to tops? Or like, how do you get better at timing your exits and entries in the market? I'm not asking you when the top is and like to tell me when to sell it, but like, I'm asking you how myself and our community can identify points in time and be better at exiting their portfolio when they have a bunch of different crypto assets. in times of froth?
And you're gonna love my answer. Don't like don't focus on this. It's a fool's errand. We have never internally said we are going to try to sell the top or buy the bottom. This is a really, really ludicrous way to look at markets. I'm not saying this about you. I'm just saying this because this kind of exists as like prophecy, right? I think people don't understand how coincidental buying or selling is when it comes to like looking at it in hindsight. You will not know it's the top until 6 to 12 months later, in which case then it's all a semantic game of what is the top and what is the bottom. There are people out there that don't think that, that think that the top was March 21 and don't think it was, November 21, which who knows, like who's right and who's wrong. This is all like, everyone can be right, everyone can be wrong, right? And it's like where's the local bottom? Is it 16K? I don't know, maybe, right? So I think this is all kind of semantic, kind of confusion. I think the more interesting thing is I tell our investors and I tell like our friends and peers in the industry, we buy and sell conditions. We don't buy and sell price, right? There's a universe where I will buy 100K BTC and sell down, 20K BTC, right? That has happened. Not the 100K part yet, but God willing, we'll get there. But you see what I'm getting at, right?
Yeah,
like
yeah.
I don't think it's an interesting way to think about the space when we're thinking about, buying and selling tops, because we never view it as a price determinant, right? If I told you, a year ago that you would have the opportunity to sell, 72K, you'd be like, I'd take it every time, right? Or sell 50K, you'd be like, I'd take it every time, right? And then you're at 50K, you're like, I'm never selling this asset. It's going to infinity. Why would I ever sell, right? So again, we buy and sell conditions. We don't really buy and sell price. And I would say for everyone who's listening at home, who's like thinking about doing this, don't. It goes back to the earlier, kind of conversation, which is either have a long-term view or like don't have a view realistically. And if you want to like trim around your portfolio, fine, but just consider conditions, right? When your neighbor's yelling at you at how much money they're making on like, KuCoin or whatever, then like, yeah, maybe you should de-risk of it, right? And when everyone's telling you that like you're a criminal for touching crypto, maybe you can buy a bit, right? This is something that I've really tried to work on over the years. It's just things are never as good as they seem. Things are never as bad as they seem. It's somewhere in between.
Yep. Yeah, it's super helpful. I mean, I think that people are obsessed with like kind of trying to time the market. But I think it comes down to like knowing your style. Maybe you could talk a bit about this, like kind of like the different styles that you think will do well in the crypto markets for the coming years. Like if you had to choose a couple ways of investing, and I know you kind of laid out like because of the emergence of these different players in the market, that there's basically there's less opportunity for kind of like the smaller fish. And I mean, I was listening to a podcast recently, it must have been maybe it was a blocker or something, and they were talking about how that there's actually more opportunity right now in the liquid markets than there are in like the private markets for some of these like out non-crypto native people that the liquid markets are really like kind of still inefficient. There's still a lot of gaps to be filled compared to TradFi, and they kind of feel this way. And I know that you feel that way as well, but if you had to kind of lay out a couple different styles of investing or participating in the crypto markets for somebody like us, for somebody who's listening, like what would be some of the recommended broader strokes of participating in the markets, from like the most basic, like passive, to more like intensive?
Yeah, just keep it as passive as possible.
Yeah,
that's my number one view. Again, like this is, when you launch a fund, when you run a fund, when you do this stuff professionally, it is the most arrogant thing in the world if you really think about it. You are telegraphing to the market that I think I have some value above everyone else, right? Whether or not like I believe this is kind of irrelevant, but it's more about the intention you're making. Like you launch a protocol, right? Building something, you're basically saying like, this is a problem that the market has not solved and I am here to solve it. And everyone else has been wrong so far if they're trying to attempt something similar, right? Even running a podcast, right? It's like, I'm running this because I think people aren't asking good enough questions, right? So I think this is a very similar view, right? Like, I don't think most people should be trading. I don't think most people should be spending their time speculating. I take the approach of a very heavy kind of behavioral finance approach. I went to UC Berkeley. This was a very big kind of topic of conversation all the time. A lot of our, kind of university classes were tailored around behavioral finance, right? And I think crypto obviously heavily leans into this. And I think we've went away from the world of value investing based off of, metrics, and we've gone towards a world of value, investing based off of belief. And belief of like what other people can kind of are willing to underwrite. So that's kind of how we think about markets broadly, if that makes sense. So
buy ETH, Bitcoin, Sol, maybe hang on, or pick a couple other coins, stick to the majors. Like most people should just stick to the majors, no? But like, isn't that just like the consensus trade right now? Like, I think I saw you tweet about this. You were like, okay, guys, like everyone's saying stick to the majors, but you're saying that there's a big chunk of edge of meat to be gained, to be grabbed from like this sector of coins that is people are all just writing off kind of like as like not as good as just like buying the majors. And so like, but now you're saying just do the passive thing. So like, is the passive thing buying the majors, or is the passive thing coming up with a thesis, but then not over trading it? Like, and maybe you can talk to us a bit about kind of the idea behind that tweet as well.
Yeah. So the tweet was more so because, I had gone to, a few coffee chats and whatnot with friends that are other investors and, VCs and whatever. And every single person started telling me about like VC unlocks and how they're going to short VC unlocks and buy majors. And I was like, okay, like this was interesting like 6 months ago, right? Like this is no longer as interesting to me. And wouldn't you know it, since the time that tweet happened, like, alts have rallied pretty damn hard, right? I'm not like claiming credit for this, but I kind of am. But being more serious, like I'm not, my view isn't that this stuff is going to be true like forever. It's just more so there are more interesting trades and less interesting trades. And this was a very interesting trade 6-9 months ago, and it's not as interesting as it was then. I don't think you're getting as much kind of value as you did 6 months ago. And obviously this has been true, right? Can alts go down another 99%? This is what everyone kind of has a conversation about. Yeah. Sure. But is that like the best way to kind of put your mind to work? I don't know. I personally don't think so. I think on the other end of it, saying like, what should the average person do? Yeah, just buy things that you have a belief in, right? Like, and you can genuinely be like, I can hold this thing to death and I won't really care. Sharing conviction from Twitter is the worst thing you could possibly do. Don't ever do it. Like, you don't know what someone else's intentions, motivations, background, view, time horizon is at all. So don't ever try to like base your conviction off of them. And I think it's pretty easy to have conviction in like BTC, ETH, Sol if you're going to pick anything in crypto. And this is also why they don't really kind of puke out so much, right? Are you going to miss the one-off memes and the one-off like DeFi protocols that do really well? Probably. But, you will be better off, right? Like something interesting one of my mentors told me a long time ago that he said, there's no part-time doctor, there's no part-time lawyer, there should never be a part-time trader, right? Like that's full stop, right? And if you're doing this, solo, it's like very, very difficult. So there's a very small universe of people that I think are capable of managing their own money solo, who can trade pretty actively in a 24/7, 365 market. Just like think about that, right? Like you want to be a solo trader in a 365 market 24/7. Like you're just kind of guaranteed to lose over time, right? If you want to be passive, great, but otherwise it's kind of impossible.
It's the financial nihilist. Like these people are, the people that you described, the retail traders that are trying to be active and have some edge. Like they're gambling at the end of the day. And I think deep down they probably know that they're gambling, but like it's tough for them to admit it. But ultimately, like maybe there's a couple that graduate from that and they end up doing something more professionally or not. They end up just losing their capital. But yeah, I mean, the current state of retail is a little bit sad. Like it is like a gambler's world and it's very nihilistic. But I think the industry isn't it's almost like the industry kind of used retail to bootstrap a little bit, and now it's less community oriented, and it's more professional, And like you said, we're starting to see kind of like the dichotomy start, like those two classes diverge, right? Where the retail is getting a little bit less sophisticated in a sense. They're just gambling their money away. And the larger institutions are kind of like continuing to set themselves apart. I mean, I have like two kind of like competing like paths where this could go. One part of my brain is saying like we always need retail, like the elite class is always going to need some sort of retail to like, use for exit liquidity and like, end up like preying on. And that's kind of the predatory sense. But then the other perspective I have in my brain is like, well, retail is just kind of, maybe they end up learning actually, and they're not going to be active. They're going to be more passive. And then you're going to have the elite traders and the institutional professional traders that compete against one another. And so I'm curious if that's kind of like more of a more realistic viewpoint, and like what is the consequence of this industry when the institutions start competing against one another rather than competing against retail?
I think there'll always be competition against retail, right? Crypto is very different than like equities, right? For one, it's like finite supply, right? So someone else has to sell their BTC in order for you to get it, right? Like, it doesn't really grow. Like, fine, it grows like, has net inflation daily, but like, it's still finite within the context of 21 million, right? So, you need people to participate, and there's still like tons and tons and tons of retail that are active in crypto. My view is more so that like over time, like retail and TradFi still exists, right? It's just called 401ks and Roth IRAs, right? So, or pensions or whatever you want to call it, right? It's like this passive bid daily on ETFs like exists, right? And that's kind of what saves the market over time, right? So that will always be true. That will always kind of be the case. I think it's just more so, in terms of getting retail kind of traders and investors. The more interesting thing I think will be, can people make money day trading crypto over a long enough period of time? I think the odds are really stacked against you. And I say this fully knowing that like for us, it's very, very difficult. Like no part of this is like a, cakewalk and like, I'm going to take someone else's lunch money. No, that's not the game, right? I'm saying this fully knowing that like, and appreciating that it's very, very difficult running a liquid fund, in crypto. So, doing it from a individual perspective is a very different ballgame. Like you just have to be honest with yourself at a certain point in time and say, hey, look, like money wasn't as easy as it was back then. I'm not really making anything. Best trades have been when I've gone on vacation and it just held, right? That kind of thing.
Welcome to the Ignition, Mantle's newest campaign to liberate the growth power of Bitcoin. FBTC Ignition has officially begun with a total token supply of over 2,000 FBTC with a TVL of over 150 million. Right now, you can go on the FBTC website to see all of the featured campaigns, staking opportunities, and liquidity pools where you can utilize FBTC on-chain today for some of the best yields available on L2s. The Ignition Sparkle campaign can be found at fbtc.com/ongoing-campaign.
Yeah. I mean, I am happy to disclose that my personal equity portfolio is full stack coin. So with that in mind, Zaheer, I'm curious, are you a coin bull as well? And if so, do you think that coin will outperform like majors in a further crypto bull run? Or are you kind of bearish coin and don't think it's really worth an investment?
I think being a crypto person, you have to be, if you're optimistic on crypto, you're kind of almost naturally optimistic on coin. Coinbase represents, the most quote unquote regulated exchange in crypto. So, that growth will have to happen somewhere. Like if you're bullish on BTC, bullish on ETH, like where's this executing? It's on Coinbase mostly, for, institutional investors. So, naturally kind of leads, like one leads to the other. I think, in terms of outperformance for majors, I don't know. I don't really have a view, to be honest. I could see both ways. A lot of my sharper investor friends have mentioned that they're more optimistic on coin than they are BTC and ETH. I could see it. I just don't spend time on it.
Fair enough. Do you have any particularly contrarian views that you think are especially contrarian or not kind of what people think about in the space today that you think are important to share? Like, is there anything that comes to mind where you've been either particularly right, wrong, or still hold a view today that you think other funds or other investors don't hold?
I think I have three things that I would kind of categorize in that. The first one was the VC trade. I think that's kind of already unraveled and people realize this now, which was VC as an industry will get smaller relative to liquid funds. And this will, I think, start being true over time. I think we've seen the VC unraveling part and we haven't seen the uptick in liquid funds. So that was the first contrarian take. I think the second contrarian take here and now is that Ethereum will probably be fine from an identity perspective. I don't think this is a catastrophic kind of moment for ETH, and I think coordination and human incentive will triumph over infighting and dogma. And then I think the third most interesting thing, or probably the most interesting out of the contrarian views that I have, is that regulation, while important, is not as important as credit expansion in crypto. The number one reason why crypto assets don't go up as much as they used to is because of credit expansion, not because of anything else. To give you an idea, like, Genesis used to do like $20-30 billion, and I believe this is the case, but $20-30 billion in loan originations in 2021. We have more or less probably a couple billion at most across the whole industry now. For anyone who runs a real financial institution outside of crypto, they know that crypto is the most inefficient kind of capital base to play in. If you have if you're an institution, you have to buy your spot BTC. You can't really do anything with it. You can't cross collateralize it. You can't increase your GMV against it. Like, it doesn't really work. IBIT kind of solves this, but even then you're getting like a 30% LTV loan, which is still big, but only really, really large institutions are getting this. So the number one thing to grow crypto is credit expansion and being able to borrow against your holdings in a more, obviously sensible, but being able to be a little bit more flexible on the assets that you hold. Right now, it's just a black hole of, if I buy the spot asset, I can't really do anything with it, right? Once rates come off, if traditional lending firms are more interested in underwriting crypto lending desks, right, then you can see asset prices do quite well because people don't need to sell down their BTC in order to finance their life. You know what I mean? So that is the single biggest kind of contributor to asset price, I think, doing well over time. And I think this is why the rates trade is so important for crypto. Not because, rates come off and then people punt risk. Fine. That's obviously interesting. But rates come off, crypto becomes interesting as an asset class again, because now you can actually park money here without having op cost of 5% in a bank account. That is something that people don't think about. Stablecoin growth, screams basically during a lower rate environment, right? Because why would I have my money on chain if it's not collecting as much as it is off chain, and it has extra risk, and it's hard to move around, and have to on ramp and off ramp, all of these things inhibit growth in crypto. So once people can move that money more freely because they don't really have that op cost, then the space grows pretty materially.
You might have just answered this question, but do you think there's any demand from larger liquid institutions to use DeFi, put funds on chain and use Aave, or for larger institutions holding Bitcoin now to go to a Bitcoin L2 and use one of those? Or do you think most of that capital, that credit expansion, is going to happen off chain and then migrate on chain rather than originating on chain?
It can be both, right? It doesn't really matter too much. I mean, I think it will be both. BlackRock's Biddle fund, right? That's built on chain, all native capital, right? And then also on the other end, right? Which is okay, if you're some huge, credit fund, right? And, rates are 2%, let's just say, in a year or two, right? And then you have, okay, I'm not really getting anything outside of, out of my, brokerage or bank. I'm going to move this money to Aave, where yields are 9% on USDC. that's like a very different ball game. And people, maybe not everyone, but some institutions will take that gamble. And now that just brings the cost of capital down like materially, right?
Yeah. So more nuanced take here that it is the 25 basis point rate or rate cut that presumably is coming. Like do you think that's going to make an impact, or is there a certain threshold where we need to see rates be to have an actual impact on speculative demand for crypto and other assets?
Again, I don't really care about the speculative demand aspect of this because that's harder to kind of gauge, right? I think if it happens, and we'll see. I think on the rate side, 25 basis points, while it's trivial, markets are always forward looking, right? The 10-year rate is drastically off where it was in like mid-July, right? Or early July, relative to no differences in, federal fund rate, right? So you already have the market pricing in these conditions before it even happens, right? So it's more about the telegraphed change in, the federal funds rate, basically, than it is about the actual change that they make, right? So if we look at the dot plot, in September, and we say, wow, this looks crazy, right? Like all these Fed, people basically think that, we should take off like 200 basis points across the next 2 years, right? You'll see that reflected in the market before it happens. And now the cost of capital comes off pretty significantly.
Yeah, I think that's a sentiment that we've heard, where it's like the kite and the tail, and like, the kite starts to shift and then the tail goes right and whiplashes one direction or another to an extreme, whereas the kite just shifted. It creates like a much more significant amplitude at the end of the tail. I had Andy, feel free to jump in. I had a question, but I just distracted myself.
Yeah, I mean, I'm just curious, like, kind of shifting out of the macro into more of some of the crypto stuff that you guys are doing. So I understand that you, outside of the fund, albeit you're anti VC, or you're slowing down VC take. We can't all do as we say and say what we do, but no, I'm kidding. But you do some angel investing on the side in your free time for fun because you like to support, early stage builders. And I know that we have some, shared portfolio companies. I think one of them being Anisha. I'm just curious, like, what is it in particular? Like, what is your angel thesis? What is your deployment rate? What are you looking for? And maybe we can talk more specifically about Anisha and kind of like what you see there.
Yeah. Thank you for making me sound so magnanimous, Andy. Out of the kindness of my heart, I angel invest into certain protocols, right? No, I think, I really hate angeling, to be honest. It just like, it feels like I'm never going to get my money back. And it's not that I'm not bullish on the projects I back. It's just like the time window is just so long, right? Relative to like running a liquid book. So yeah, I've written too many angel checks in the past year. I think
it's kind of a trip, man. It's kind of a trip. You're like, just sent another one, praying that I see that cash again. Who knows?
Right. Always like you feel so jazzed about it, right? And you're like, this is gonna be great. And then you like have to send the money, and you're like, wait, what? Like,
yeah,
this thing's never gonna give me my money back.
Yeah.
But
I'm
genuinely,
Anisha's gonna do pretty well. I think they have a really cool model for their token and for their kind of incentives. But yeah, I mean, what's the Anisha thesis for you? Like, why was that compelling?
I met Zahn a couple years ago, and so Zahn is one of the co-founders. For those of you who are listening, I'm sure you guys have had multiple Anisha shill fests on these podcasts. I'm kidding,
these fucking funds, man. They come on and they say they don't do this, and then they do this, they do that, then they say this. I was gonna ask this guy what coins we should be bullish on, but I'm scared he's gonna tell us some shitters.
Yeah, correct. No. But I think Anisha is a pretty simple thesis. I think Cosmos has never really had a kind of winner. That was like my original kind of idea behind it. I thought the tech was always more compelling from people that are smarter than myself. and it never really had that like kind of strong uh, cross-dependent community. And I thought Initial would be that future. And I think it's also just being able to own the whole stack. You know, if you're the average like app chain, basically, or in their case, the Minutia. You know, that is a very compelling thesis because I think now we have like so many conversations about L2 fragmentation, about what kind of value should be kind of cross collateralized between the app and the L1, and basically like how the entire messaging protocol system within that works. So Initial was always more interesting and compelling to me because of this. It's also something I really look for in founders. I think we have to remember none of these protocols have ever really been vindicated. There's very few. I would say it's like BTC, ETH, and Sol have been vindicated as like real use case and value. Outside of these three, like everything else is kind of like a dice roll in terms of it working out and having product market fit. Hopefully Arbitrum, Optimism, hopefully they all get there, right? Obviously some of these are contradictory, but I think you really back the founder. And I think that's a really understated part. It's like, I don't know what that future is going to look like. I don't pretend to know what that future is going to look like, but I back people that have the intelligence in one angle, but integrity also to say, I don't know, or, I need to pivot, or I need to change my, opinion, or, whatever happens, right? And I think that's like a very good quality that I find within, the best founders. And I think I see that with the Initiative team in particular. And for me, like my angel criteria, there's no deployment rate or anything like this. Usually it's someone that I know really well, and I have, or I'm borrowing someone else that I really trust kind of, point of view on the person. And, I believe them to be like generally high integrity. And, most importantly, like if I write a larger ticket, then it's someone that's willing to listen to me. That sounds arrogant, but like really, like I think that's a big part of it. Like if the team is not willing to listen to me, I just don't want to be a part of it. I'm not saying that I know all the answers, but I think it's really important that like they have good feedback mechanisms. And I find that a lot of VCs nowadays are like really hands off with the protocol, and that should be the case generally. But in areas that the VC knows better than like, in some cases like kids that are younger than 20, right? It's like they should be stepping up to the plate and being like, actually, you have no idea what you're talking about. Let me tell you how this is going to work, right? Right. And it's fine. Like maybe I can disagree with someone on their project vision or whatever, but it just makes me a little bit more reluctant on angeling in. I really like people who are willing to take productive like feedback, basically.
Yeah, and act on it and execute on it. I think that's a trait of a winner in all areas of life. Kind of like, I think we probably have to bounce here in a couple, but one last thing for me as far as like what you're doing with Split and kind of your career in the space and just kind of looking to keep building. Like what is the vision for Split Capital in 5 years, 10 years for kind of your personal brand? Like where are you trying to go? Is there something else that you're looking to build? Is it strictly just kind of take care of your clients as best as you can and grow the fund and kind of scale? Like where is it that you want to end up and kind of leave the community here with some inspiration for what's possible out there?
Yeah, I've been fortunate enough to live a pretty great life, all things considered. Got into a good school, had good mentors and good family and all these things. So the sum of my ambitions is not to make more money, even though that seems like that's the direct kind of byproduct of working at a fund or running money. My interest in crypto is not only in the angle of being able to be right in a market. It's larger than that. I was around in an era, I think a lot of people like were in 2017 and early 2018 and then left and came back in 2020. I was around in that 2018, 2019 period where a lot of the, belief in crypto was basically stripped away, and it became a philosophical argument every day for what crypto should become. And I still kind of really think about crypto in that way. I think, when we launched Split, the idea was obviously make a product that people can get behind and understand and value, but also how do I become someone that is, quote unquote, an ethical kind of thought leader in the space, even if it's a small, little corner of the space, right? How do I push the things that I think are better? How do I remove financial nihilism, right, from being the zeitgeist topic, right? Like, meme coins are great. Like, we'll make money on them, but like, broadly speaking, I'm not like, I'm not going to support the average meme coin that's like brain rot for kids, right? Like, some of them are better, like, and we like, some of them a lot, but, I don't want to participate in these like really, really nasty kind of zero sum games. Like, I'm not big on gambling. We've never backed a gambling protocol, right? Like, I don't believe in it, right? Personally. So, I think, can there be a way to be someone in the space and operate, and make money and do all these things while also kind of evangelizing the best parts of this community in space, like going forward, without trying to be like white knight-ish, right? Like, I'm not saying that I'm better than anyone else in this regard, but the idea is like, can we bring some sort of better frameworks for the longevity of crypto? That is the goal for Split Capital. That will be the goal until, this fund no longer exists or owns the universe, hopefully. One of those two scenarios, or whatever's for the best. But, in whatever way that we can help move the space forward, like, we will try to do so. We do a lot of things that like no liquid fund should do, or, does. Like, go to conferences or do podcasts or whatever, right? Like, this is not necessarily the best use of time in terms of making every dollar like in the next day, but it's better for the space overall, which means it's better for our fund as well, and kind of the vision that we want to put out there. So that's the goal with Split Capital. We will have, I hope, complementary business lines over time that we think can achieve this vision in a much better way. We want to do it within a US centric view, and we want to bring crypto back in the US in a very major way. So, all of these things are very important to us. And I feel like in the last couple of years, we've really, really seen some of the nastiest characters in the space and people who've really tried to rob people in the space in a way that is unbecoming in any industry, right? So, how can we bring something back, make it positive for other people, and hopefully, a net positive overall?
My question was about the current election and the political landscape of crypto nowadays. Don't feel obliged to give into that brain rot after what you just said, and realize that it's not exactly like this podcast is something that like is very much a learning experience for us and hopefully for everyone else as well. And so, we were around, and I think we share a lot of the same values.
Yeah, I mean, even with the political stuff, right? Like, I grew up in California, went to a very liberal college, right? Like, so I have a very, specific point of view on these things. And like, I would say even then, like, it's changed a lot in the last couple of years when this industry has gotten demonized in the way that it has, right? It's irrational, illogical, like, doesn't make sense, hard to get answers, right? So, it's pretty straightforward that, like, unfortunately, it has purely become a binary bet in crypto with, what the outlook on the political landscape is supposed to look like.
Cartesia is your home for app-specific rollups. At the forefront of developing new tools and platforms that enhance the capabilities of blockchain technology, Cartesia enables applications that are flexible and built to scale. Build on a full Linux environment and use traditional software libraries, but in blockchain development. Go to cartesia.io, that's cartesia.io, to learn more about building your own app chain today.
Zaheer, it's been a pleasure. Really enjoyed the conversation and the insights shared. Really appreciate it. Would love to do another one sometime in the period ahead in 6 to 8 months. I think the market structure will be significantly different. So it would be cool to have you on again. And yeah, cheers for coming on, man.
Thanks so much for having me, guys.